News First, exclusive.
Hello there and welcome to another News exclusive with me, Tinal Tilakaratna. Well, today we are joined by a key figure from the People's Bank of Ceylon who plays an important role in Sri Lanka's economy. Well, it's my pleasure to welcome you, Mr. Azzam Ahamat, the Head of Finance at People's Bank.
Thank you, Tinal.
Well, as we all know, Sri Lanka has been through a rough economic crisis, I would say, and we're just out of a politically charged season. Now, with elections and the formation of a new government and of course new rules, well, before we get in deeper into People's Bank, Mr. Azzam, I would like to ask you, what's your take on the current state of the economy?
Perfect. First of all, allow me to extend the courtesy and thank you and everyone at TV1 for the opportunity extended to People's Bank. With regard to your question, let me just take it like this. First of all, let me state the obvious. Let me say that we are currently in a period of rebound as an economy. We witnessed 4 quarters of consistent growth since June 30, 2023. It means something when you look at where we are coming from, a period of deep distress over the last 5 years. So let me add some greater flavor. Let me say since January 1st, 2019 up until 30 June 2023, the country, in these 18 quarters, the country's witnessed 14 contractions. It goes to show what sort of distress the country has experienced. So since then, since June 30, 2023, if we witness 4 quarters of consistent growth, that tells you something. And also, the central bank expects our growth this year to be close to 4%. That's up from a 2% that ADB, IMF, World Bank estimate early this year. So in other words, we're doing better than we thought. Yeah, that tells you something as well. Looking ahead, looking at the next few years, I would say, so as long as monetary and fiscal policy discipline exists, visibility exists, predictability exists, and we protect the vulnerable segments of society. So as long as we do all those, we can reasonably expect positive growth looking ahead. And I would say, sitting where we are now, having seen what we've seen, the next few years looks fairly positive.
Yeah, well, now speaking about People's Bank, of course. Now, what's your overview of the financial year so far? Now, during the last 9 months, I believe the company has been seeing a bit of distress. Can you elaborate on this matter?
Fair enough. Let me say this. First of all, typically in a bank, performance is measured on account of 3 fronts, 3 primary fronts. Foremost, liquidity. Liquidity is king. 2 is profitability. 3 is solvency. Before I sort of deep dive into some of these 3, let me just take you a step back to add some greater context, because I feel it's my duty to do so. If you go back 3 years, not so long ago, we were in a situation of deep distress in terms of from a liquidity standpoint, and there was a reason for that. If you go back to 2019, post Easter, then we had COVID in 2020, 2021, then the economic setbacks of 2022. In each of these, in these years, when typically a conventional institution would take a step back, People's Bank's taken 10 steps forward, because that stems from our national purposes, social cause, and our role has been always to support government, to support economy. So when everyone else was typically not looking at extending loans to government, we did so. When no one else was looking at opening LCs for essential services, we did so. So that created liquidity pressures. And when to bridge the liquidity shortfall, we had to mobilize deposits to retain and both grow our deposit base in a high interest rate environment. So what happened was our cost of funding moved up, and it created pressure on our earnings. Pressure on our earnings means creates some pressure on our solvency. It must be said, however, we did maintain strong solvency buffers throughout, which has helped us. But fast forward today, even though we've had pressures on each of these fronts, from a liquidity standpoint, we're at an all-time high. So imagine, from a deep distress not so long ago, we've converted that to an all-time high in terms of our liquidity. And we can only do that because of our network of branches and the commitment of our people. 2, from a profitability standpoint, in fact, very recently we concluded a long-standing process to restructure a sovereign-backed a SOE debt. Post that, we will recognize interest income stemming from that restructure, which we've suspended out of prudence, report the best year in terms of profitability in our history. So it means something as well. And and your point is right. For the first 9 months, our earnings were distressed because we suspended the interest income on this particular loan out of greater caution. Yeah? And now we can bring that all back. Third, from a solvency standpoint, solvency is measured by a regulatory sort of measure called capital adequacy. So that's for every rupee of risk, how much of capital buffer you maintain. The minimum is 13.5 cents for every rupee, and we will maintain close to 18 cents to a rupee at the end of the year, which means we have more than adequate buffer to cushion against any unforeseen risks. So in all these three fronts, this year will be our best to date.
Well, if I was to ask, how would People's Bank differ? What are your differentiating factors, rather, from other banks across Sri Lanka?
Fair enough. There's quite a few, but let me name 5. All of these differentiators, first of all, stems from our founding premise. We were established under People's Bank Act 1961, and the purposes we were set up was to take banking to rural Sri Lanka. So we had a social purpose to give access to banking to those who didn't have access. So with that purpose in mind, what People's Bank did was set up branch service centers right throughout the island. So we have 750 of them today, by far the largest network of branch service centers. So that's the first differentiating factor. So no matter where you're from, there will be a People's Bank, sort of a bank or a service center in proximity to you, right? So that's number one. And number two would be by virtue of our branches that have been set up. We have 15 million customers. Yeah, so that's 2 out of every 3 Sri Lankans. Something we're very proud of. But that said, it must be also said there's much more we can do to sort of maximize, the service offering to across all our customer segments. Yeah. Third would be essentially our financial inclusion. Again, stems from our operating premise, founding premise. So no matter which sort of customer segment you belong to, whether you're an infant, to a schoolgoer, to sort of a Gen Z customer or senior citizen, we've got a product that suits you, whether it's deposits or loans. And the fourth, I would say, is our digital footprint. We've got 3 million customers on our digital platform. So that's taking out the minor customers. That's sort of 1 of every 3 customers. Yeah. And the closest peer having 1.6 million customers on digital. So it means to say how much we've done on digital. That is indicative of our investment in the sustainability of our business. And last and more importantly, I would say, 80% of our workforce are 45 years or less, and with an average age of close to 38. So I would say that is the driving force behind People's Bank's success. Is its sort of strong and sort of young, dynamic and driven employee base.
Now, Mr. Azzam, you were talking about your digitalization. Well, what makes you different from other banks? If you could deep dive into it.
Yeah, understood. Thank you for asking that, first of all, because not maybe many know of our digital capabilities. Let me give you a few examples. When you speak of digital, it includes a wide variety of things, from mobile banking app to internet banking to what we call banking in a virtual environment, or our self-banking units. So by way of one example, previously if we did 100 transactions at a teleaccount in a branch, today we do 86 of them at a self-banking unit. These are sort of what we call banking in a box, a 20 by 20 space which has an ATM, CDM and a kiosk. And by way of another example, if you look at the retail loans we extend, broadly, if you extend 100 loans previously conventionally, today we extend close to 90 of them. That's not with no complications in terms of security and other collateral, through our retail loan originating system. But if another example, even the account opening, the most basic step in a banking relationship, previously took 40 minutes conventionally. Today we do it through a sort of e-banking platform, which takes maybe 4 minutes at most. By way of another example, our corporate loan originating system, which was really rolled out recently, we do 50% of our corporate loan disbursement through that platform. So it's ultimately it allows us to be sort of seamless, save time from request to disbursement. And it must be said, we're not complacent. There's much more we can do on that front, but we've come a long way in terms of digital. And like I said, we've got the largest digital customer base of 3 million, far more than anyone else. And that's not our destination. We see there's absolutely more that we can do on that front, and definitely our focus is to keep driving that.
Well, what would be the bank's primary focus in the upcoming year 2025?
If you look at what we've done over the last 5 years, those focus areas essentially are our focus areas next year as well. So just to name them, quality lending. We have, all the banks have responsibility to start lending now to create that credit growth in the economy, so the economy can prosper. And as a state bank, our responsibility is even higher. And within that space, to extend to the sort of the micro SME space takes priority. That's one. Two is to increase our low-cost deposit base. When interest rates are low, that's a common sense thing to do, and our focus is there. It's no different. Number three is to increase our foreign currency deposits and inward worker remittances. And on this front, we've been extremely successful, Dinal, over the last few years in terms of increasing our share within inward worker remittances, which was a little less than 7% in 2020. It's almost doubled, as of now. And then four is continue sort of our collections on account of our loans and non-performing loan recoveries. That's a mainstay as far as the industry is concerned, whether no matter which bank you are, whether you're state or otherwise. That's a key that will ultimately dictate the sustainability of the institution. And then five, obviously, is to improve our digital digital efforts. We've got a lot more to do there. The focus is there. And six, to improve the customer service. That's something that we spend a lot of time sort of looking at, and we want to be the foremost in that space in terms of that aspect of our business. And there's a lot of time that's spent there. And lastly, the cross-selling. We feel there's a lot more potential to do that within our customers. So we will be spending our time and effort in the years ahead on that front.
Well, if I were to ask you, within the next 3 years, where would you see People Bank at?
The best way to answer that question is to take you 3 years back, when we were sort of deemed almost on our knees, viewed as in great difficulty. If we are able to convert that distress within a short span of time to a year or a time of the greatest it's been for the institution to date in terms of profitability, liquidity, and solvency. Thanks to the drive, determination of everybody internally and the tone at the top. And if we continue that same level of sort of commitment and dedication, and drive in the next few years ahead, as to where we could be is anybody's guess. And I would say, we would obviously, having built the platform to where it's now as a team, sky's our limit. And I would say within that, obviously, we want to further, the purposes of, support the country's economy, and so particularly the most vulnerable segments within economy. And not, clearly we have a great responsibility as People's Bank, and we intend to do exactly that. So time will tell as to where we would be, but seeing where we were from, I think it's anyone's guess.
Well, I'm sure this would be a question where our viewers will be interested in. How will the interest rates which you all give, will it improve within the next year, or are the factors affecting it?
Oh, absolutely, it's a good question. I would say if you look at the interest rates that's been right throughout this year, the trajectory has been downward, and we are seeing interest rates not at an all-time low, but at low levels. And central banks sort of playing a big role and is in the country's economic revival. And if you look at the monetary policy, it's been very predictable over the last 18 months. And the reasonable expectation is rates will remain at these levels. Broadly speaking, there could be sort of a few upticks. Like I said before, interest rates being at these levels is ultimately crucial for the country's economy to grow at its fullest potential. And I would say sort of fiscal monetary policy discipline and predictability, visibility in the medium term will be crucial to create the ground that's necessary for the economy to reach that potential. And I would say, so in terms of interest rates, to your question, you can reasonably expect it to remain at these levels in the short to medium term.
All right, thank you for joining us, Mr. Azzam, the head of finance at People's Bank. Thank you for watching.